Right now, let's take the conversation further with the Chief Executive Officer of Financial Derivatives Company, Mr. Bismarck Rewane. Mr. Rewane, good morning and welcome to the program. You know I can discuss anything with you. We're just talking about collaboration, this time not among the ministries, but Dr. Oye there is saying that he sees a place where, or a situation where government agencies are working in silos, and that is making the country lose some revenue, especially when it comes to small businesses, adoption of ICT, and maximizing the potential that is available in the private sector?
Yeah, I agree that government agencies and departments are working in silos to some extent. But the whole idea is about, you talk about implementation, you talk about coordination, but I talk about alignment of goals. That technically speaking, the goals of these agencies have to be aligned, and that is the job of the coordinating minister of the economy, who, in my own judgment, is doing a great job in terms of putting these things together. But it's not easy. Getting agencies in Nigeria to coordinate themselves, and align themselves, it's easier to put 50 flies in a matchbox than to get those agencies to coordinate themselves. But quite frankly, I think the efforts are started, and we'll begin to see the results as they go along. But technically speaking, my view is that the goals have to be aligned, then coordination will follow, and then execution and implementation will be a breeze. So I'm not too bothered about that. But let's just get the basics right, and everything else will follow.
All right, and then we're looking forward to inflation, and we see FDC has already released its forecast, 23.15.
Yes, it's an interesting development. Because let me first clarify that the fact that inflation is declining does not mean that prices are coming down. It only means that prices are increasing at a slower pace than it was in the past. So why are we saying this? Our projections are that inflation will decline by about 0.56 from 23.71 to 23.15. Why? Two things. One is that the exchange rate has stabilized and has actually appreciated marginally. The difference between the power and the official market has narrowed to about 35 to 40 naira. We also seen a drop in the price of diesel and petrol at this time, and we are also beginning to see, we've seen some, not a contraction, but a slowdown in the rate of increase in money supply. So those are the major issues. But generally speaking, logistics costs have reduced. The key drivers, again, lower diesel price, base year effect, and generally speaking, the Hajj and the Hajj period and effect is having a dampening effect on prices. So what we saw in the last month was, and that was before the flood in Mokwa, all right? We saw prices begin to moderate. We saw that the exchange rate stabilized. We saw the price of diesel drop to below 1,000 naira for the first time in many years. And we also saw that the expectations, especially because Dangote was bringing down the price of petrol and diesel, people were no longer scared that the price of logistics costs would be increasing. I think there was some kind of cautious optimism amongst investors, manufacturers, and farmers. That is what has brought down the price. That's what is making us forecast, touch wood, that inflation numbers, which are coming out in another 4 or 5 days, end of this week, will come in 23.15 using the new methodology.
So, Mr. Rewane, let's talk about food inflation. We know that with the new methodology, the portion or the value given to food as a determinant of the basket has reduced.
Yes.
I don't know what your thoughts are on that, and if you think that, for instance, puts a question mark on the reality of inflation number when it is released.
Yes, it is true that normally when your income declines, that amount you ascribe to food, the weight of food increases. So it is true that the weight of food has gone down from 52 to about 40%, which is what the NBS is using. But the reality is that normally when incomes decline, that amount you give to ascribe to necessities, food, medicines, and education will actually increase. So, but now that is the reality that they have brought it down to 40%, and we have to live with that. And the reality is that there's an expectation that incomes will rise. If income rises and output increases, then it is possible that 40% for food basket becomes 40% food weight on food becomes realistic. But that's the issue is that when we are comparing likes with likes, it is important to note that we have the major components and major drivers of inflation being one, the price of petrol, two, the price of diesel, three, the exchange rate pass-through, and four, money supply growth. All of these things seem to be showing some modest moderation, and therefore it is possible that inflation begins to actually decelerate. But the deceleration we are talking about is only 0.56%. It's nothing compared to others. In other words, when you see a country like Ghana having such a sharp deceleration in price, when you see it happening in Kenya, when you see it happening in South Africa, when you see that even happening in the European Union, it means that when you have this deceleration, part of it is based on the momentum, national, global momentum, part of it is due to the specific policies, and also part of it is because things are getting slightly better.
So is this sustainable, this, well, downward trend that we're expecting on inflation? Is this the beginning of the drop we've been waiting for, or anything can happen?
No, we are still vulnerable to shocks. And quite frankly, the global price of crude, just as we saw just now, has gone up to $67 a barrel. At that price, that is the basic cost of crude, which is refined into petrol. We cannot say that categorically that the price of petrol in Nigeria will continue to decline, because that way we'll not be able to sustain it. So there are many unknowns and imponderables. One, the China-US talks, which will have an effect on global trade and tariffs. We've seen the value of the dollar. The dollar has actually depreciated against a basket of currencies. Against the pound, it's as low as 1.34. That is, you need $1.34 to buy a pound, and this should be as low as high as $1.25. So what I'm saying in effect is that you manage those things which are within your control, and you try to just try and manage, try and work around the other things which are outside your control. But generally speaking, the Nigerian economy seems to be limping its way out of the current crisis, just limping. I'll use that word for now. Will it be sustainable water? I think, I'm not sure, but all I do know is that if the GDP numbers are going to come out, they're going to be stronger than we expected. And if inflation next month, that is the month for the month of June, comes out and it stays low, then I can say categorically that we will end Q2 and probably start Q3 on a stronger footing than we have today.
Well, Mr. Rewane, it's still planting season, so the expectation is that domestic commodities prices continues upsurge.
Yes, definitely. We have the problem with tomatoes because of the tomato Ebola. We've seen pepper up; those are the perishables, and we see the Mokwa effect, which is the major is the link between the north and the south, and the food basket and the non-food, then food, the bread basket, and the food consuming areas. So we are going to see that knock-on effect on prices. But generally speaking, because the exchange rate, which is the critical factor price in Nigeria, is stable. As a matter of fact, it has dropped below 1,600. That is, it's now 1,598. Because people have just come back from the Hajj and they're selling their dollars into the market. We expect the Naira to depreciate a little bit in the next few days. We've seen the stock market, as you said it, MTN is in an all-time high, which is an indication of investor optimism. So generally speaking, there's an air of cautious and optimism as against speculative optimism. Uh, I think we, touch wood, we think that things begin to uh, improve. But I want to warn and caution that the fact that economic parameters and data points are moving in the right direction does not mean that the people are feeling the effect of that. There's hunger in the land. There's a lot of consternation, a lot of fear that this improvement is not sustainable, and also there's a lot of fear that the income distribution and opportunity distribution, there's income inequality, opportunity inequality, and there's a big gap between those who have and those who do not have, and between what the government is doing and the impact that is being felt by the people. So there's a lot of work to be done in terms of making sure that this economy has the absorptive capacity to take whatever injections are coming in, and also to manage the effect to ensure that people from all segments of the country are enjoying the benefits and the tangible effects of reform. Reform without policy change, without institutional reform, is meaningless.
All right, Mr. Bismarck Rewane, thank you so much always for sharing your findings, research with us here on the program. Mr. Bismarck Rewane is the Chief Executive Officer of Financial Derivatives Company. You have a great day ahead.
Thank you for having me.